It's Tuesday, September 27th, 2011, and the markets rally. My name's Des Woodruff, the senior analyst and possibly your future mentor. When it comes to trading and trading education, you are at the right place at the right time. And the markets rallied fairly strong today, even in the light of all the bad economic news that's out there. And not to leave out Greece. What a train wreck that is. Italy. Portugal, Europe as a whole. The Eurozone is in deep trouble. They're trying to come up with things. You have the President of the United States urging them to do everything in their power to make that right so there's no significant default, because that would have a trickle-down effect to the rest of us globally. All right. With that said, we have the Dow up 1.33%, the S&P up 1%, NASDAQ up 1.2%, the Russell up over 2%, banks down below 1%, so it's lagging what you're seeing up here, and it did lag all day long. VIX up or down 3.3%. Gold has a nice little rally here at almost 2% in the green. US dollar down 0.6%. That helped out the markets quite a bit. So watch the US dollar. US dollar drops, the markets pop. When the US dollar pops, the markets drop. Something to pay close attention to. Crude oil up significantly, almost 9%, so knocking at the door 3%. So commodities had a big time. Nice run today here in the markets. The trend closed bearish for the day, and that's interesting to see when the markets had such a bullish day. Now the markets were up quite a bit more than this. I think at one point over 250 points, but they could not hold those high areas, and I want to talk about that here. All right, I want to show you the technicals, because I see, man, if you watch the news and you're listening to the talking heads, everyone's talking about, hey, is this the bottom? Or are we heading higher? And technicals are saying no. And let me show this to you so we are all on the same page. S&P daily, we have a trend line going from this swing high down to this swing high. We have a swing low up to here. We have a red line for lower trend line, a blue one for our upper trend line. And if you look here on the S&P, we drop. We get a little, looks like a bullish thrusting type pattern. We pop, higher high, higher low, pop, higher high, higher low. But then we end up with what's called a shooting star reversal pattern. Went up, tagged that trend line, and that's where all the bears came in and said, all right, we're at resistance, let's sell into this strength. And that's precisely what you see in a bear market, is when you get large strength and there's significant selling taking place into that strength. That's smart money coming in and exploiting an opportunity to short at higher levels. If you look down here at the MACD oscillator, you'll see a zero line coming across here. We've been sub-zero several days. We're trying to rally back higher, but the bottom line is we are sub-zero. There's a great chance of this acting as resistance and dropping yet again. If we do drop again, there is a significant chance of a breakdown taking place. Now, let's look at some others. Let's look at the Dow. This is the INDU, the Dow. We have this big drop. We have this beautiful bear flag. The bear flag drop, boom. We get a bounce, and what was acting as support, when that support was broken, now is acting as resistance right there. If you notice, we are below the 20-day moving average, which is also acting as resistance. If I go back to the S&P, we are below the 20-day moving average. Let's go to the NASDAQ daily. Take a look at this. NASDAQ daily, big drop, beautiful bear flag, but we're still in the confines of this bear flag. Rallied higher, smacked our head and dropped. We're at the 50-day moving average, acting as resistance. The 20-day acting as support. Now, what I do know, anytime you get a candlestick, the body that gets squeezed between a 50-day and a 20-day, look for major movement to take place after that. So, far as technicals are concerned, I am looking for significant movement down or up. We are at resistance now, so rally or not, the downside risks certainly outweigh the upside potential. So if I go here to the Russell, let's go to the Russells, the small caps. We could drop and choppy, rallied higher, hit, drop below the 20-day moving average. What did it hit? It came right here, resistance, this trend line coming down, resistance, this trend line coming down, boom, right there, drop, shooting star, boom, boom, shooting star, MACD below 0, and we're at resistance. So gang, I showed you this earlier. The trend ended in bearish territory, 1.21%. Oh, and let me just show you this also. The banks only up 0.98% when the markets are up much more than that. So that's a lagging financials taking place. At this very moment, the time I'm doing this video at 4:30 Eastern Standard Time, a half hour after the markets have closed, you see that the index futures are in fact in the red already. Do you see that? I'm sure they were in the green when I first started this video. They're in the red now. So I am looking for downside potential to be taking place starting tomorrow or the next day. We did have consumer sentiment report today, or consumer confidence, and we had a minor uptick, but it was insignificant in comparison to the very low 45 rating that we have on consumer confidence. We do have the GDP coming out in a couple of days. Now everybody will be watching that GDP because how things stand, it just cannot be good. Now a couple updates for everybody. The website was down over the weekend, and we're still pulling ourselves out of this mess. I'm building a brand new website that very few people know about, but I've been telling you all about it. But this website is going on a new server. The current website that you have access to now is on a different server now. We've pulled it off of the cloud, and the cloud engineers are trying to figure out what has happened. They're perplexed by it too. But the 101 videos have been taken down, meaning all the 201 videos are also inactive at this moment. So for all of you who are subscribers to the more advanced 201 videos, my sincere apologies. I will get those up ASAP, so you have those videos. And for all of those who are subscribers to the V newsletter, that V newsletter, the button's back up, but those are past V newsletters. The V newsletters this past weekend was emailed out Monday morning. So look at Eastern Standard Time right around 9:30 Monday morning. You'll have received an email from me, and you will have a that V newsletter on that with the list. So we will get all of our ducks in a row here shortly, and I can't wait for that to happen. And listen, if anybody wants to, just as a discount, if anybody wants my stock picks for the week, you'd be insane not to take advantage of these. I'm not joking when I say this. My stock picks come out each week. It's only $30 a month. It's $1 a day. For one trade will pay for itself for a year. I mean, potentially, of course. Now, if you go and do the monthly V newsletter, the monthly, in the promo code, type in the letter or the number 2 weeks, the number 2 weeks, all capitalized. It will give you 2 weeks free of charge. And you can check it out to find out if you like that style or not. It is predominantly for swing traders or investment traders, not day traders. Now, I'll give you a little discount on the 201s. If you sign up for the 201s during this downtime, if you do it right now, put in GROK 125, capitalized GROK 125, and that will knock off $125 off of the 201. So anyway, there you have it. Hope all is well. Take care, safe trading, and stay with us as close as you can, because the market's going to get crazy here.